what's the single best business in the world? And I said, if you could own a royalty on people spending money, like Visa or MasterCard, it's the greatest business in the world, and if that ever became a public company, you want to buy that company, or if you ever could buy that company.
There are a lot of different credit and debit card companies that are out there, but there are two specific ones that really stand out. Outside of China, Visa and MasterCard maintain a near total duopoly, collectively controlling approximately 90% of the global payment processing market. Even more than that, both have incredibly high profit margins. As B. Wackman said in the clip, they simply collect the royalties every time someone uses one of their cards. As we see how global cashless adoption is accelerating, with projections showing 89% of all transactions will be cashless by 2027, given that Visa and MasterCard have dominated the global payment processing market for roughly 60 years, this should mean that we can see the two companies prosper, right? Well, not exactly, maybe even just the opposite. In this video, I want to present you with the factors and show you the companies that are now aiming and slowly managing to deteriorate Visa and MasterCard's previously indestructible market dominance. And at the end, I'll show you what both companies are doing to mitigate those threats so that we can conclude if that market dominance is likely to persist or if it's slowly going away. To give some light on the situation, I'll first start with an introduction on how these two companies operate. Broadly speaking, Visa and MasterCard are both facilitators of digital payments globally and generate revenue in four key ways. Both companies have different names for their business segments, but they are basically the same. The first two are called Service Revenue for Visa and Domestic for MasterCard, and the second one Data Processing for Visa and Transaction Processing for MasterCard. Both of those are usage-generated fees and are generated simultaneously, which happens every time someone pays with either one of the two brand cards. Currently, they both collect more revenue from the data processing fee compared to the service fee that they charge. Service revenue works in two ways. The first one is when a bank, for example, wants to issue a card with the Visa logo on it, or when a merchant's bank wants to accept Visa payments. Additionally, Visa charges fees based on the total dollar volume of transactions flowing through its network. Visa charges the issuing banks, the bank that gave you the card, and the acquiring banks, the merchant's bank, a percentage based on the money flowing through the network, whereas the data processing revenue is collected in a way that when you tap or swipe a card, either VisaNet, Visa's proprietary global processing network, or BankNet for MasterCard, routes the data from the merchant to your bank to verify your funds, sends the approval back to the merchant and coordinates the actual transfer of funds at the end of the day. Additionally, both companies have a revenue stream called International Transaction Revenues for Visa and Cross-Border for MasterCard, where the two companies generate international revenue with a currency conversion fee, and geographic mismatch when the cardholder's bank and the merchant's bank are based in different countries. So here is an example of, let's say you are a European tourist traveling to the US and you want to buy new shoes for $100. You will be charged either 0.14% for a credit card or 0.13% for a debit card brand fee. Additionally, a flat 2 cents to 4 cents per transaction is charged for the use of the network. And finally, a 1.25% to 2.3% is charged depending if a currency change is needed or not, which totals to about $2.03 of revenue collected by Visa or MasterCard. Also be aware that both companies have more than 75% gross margins, whereas with Visa this number is higher than 80%, so their operational costs are extremely low. Now Visa and MasterCard have two different types of competitors in this space. Those include a couple of long-standing direct card payment competitors that have been there for quite some time, but also some new ones that threaten the entire business model of non-cash payments that Visa and MasterCard have been dominating in so far. To begin, Visa and MasterCard direct card payment competitors include American Express, Discover and JCD. There is also UnionPay, which is a Chinese company, but since both Visa and MasterCard are restricted to operate in China, I won't address the Chinese market in this video. All of these alternatives represent a very small percentage of the total market share, and they haven't seen any rise in recent years. There are two main ways that Visa and MasterCard have managed to maintain such high market share percentage in card payments. The first one is because of its famous client incentives, which is a negative revenue segment that both companies have. They incentivize people to use their cards by paying financial institutions issuing the cards. These funds help banks cover the costs of reward programs like cashback and travel miles, marketing campaigns and technology upgrades. This makes both customers and issuers wanting the Visa and MasterCard cards and promotes more spending on their networks. The downside for Visa and MasterCard is that they spend a lot of money on these programs. Currently, those incentives take up about 27 to 28% of Visa's and around 40% of MasterCard's revenue. This may seem a bit aggressive, but you'll see in a bit why Visa and MasterCard feel like they must pay these amounts in order to stay competitive. But before that, I want to mention the other reason why Visa and MasterCard hold such dominant positions in the market, and it is because of their big competitive advantages. Firstly, there is the high barrier to entry in the industry. Both Visa and MasterCard have massive networks with global reach and incredibly high payment volumes. Visa's network, for example, is designed to handle over 65,000 transaction messages per second. Both networks are accepted in over 200 countries and territories, so they're well recognized. They both support billions of active cards in circulation, approximately 4.9 billion for Visa and 3.7 billion for MasterCard. Additionally, they have the advantage of banks all over the world preferring to issue their cards to clients for a couple of other reasons. They are very secure and have high fraud protection algorithms. They also have high regulatory compliance and they are accepted by a lot of merchants all over the world. But by far the most important economic moat is their brand recognition and customer trust. Visa even did a study that showed that up to 71% of consumers reported feeling a website was secure, specifically when the Visa logo was visible. This visibility directly leads to a higher likelihood of a consumer completing a transaction instead of abandoning their card. The YouTube channel Company Man made a very good video a while back about the history of Visa and MasterCard and how they got to that point. So I would recommend you go check it out if you're interested after this video. But now it's time to talk about the competition that is really threatening both companies' payment business. These firstly include national banks supported payment alternatives that bypass Visa and MasterCard's data processing entirely, often providing cheaper and arguably sometimes better payment alternatives. A good example of this is UPI in India, which is a massive success story that now handles 84% of all digital payments in India. It bypasses cards entirely using QR codes and instant bank transfers. Then there is Pix in Brazil, which is a similar instant payment system that has seen explosive growth, significantly reducing card payment market share for daily purchases. And probably one of the biggest disruptors is Wero in Europe, launched by the European Payments Initiative, which is a pan-European digital wallet backed by 16 major banks aimed at creating a sovereign alternative to US-backed networks. This system, built around the digital wallet Vero, aims at connecting 130 million users across 13 countries to enable seamless local cross-border payments. It is directed at the growing concerns for the Europeans' reliance on the US payment network and more specifically Visa and MasterCards. Those are only some alternatives that offer some sort of direct banking payment method. Even more, another major initiative for the European Union is the supposed introduction of the digital euro currency. What this essentially will do is simply allow payments to flow directly from one bank account to the other without the need for a middleman. It is designed to act as a public good, providing a secure, cost-free and universally accepted payment method across the Eurozone. In addition to those, there are even some threats lurking around in the US itself that threatens Visa and MasterCard's current strong position in the market. First of all, there are fintech companies like PayPal, Stripe and Adyen. Even though Visa and MasterCard are present as an alternative on these platforms, in PayPal's case, for example, when both the customer and the merchant use the same platform, the transaction never touches the card network. If a user pays a merchant using their existing PayPal balance, PayPal performs the authorization, clearing and settlement internally. Visa and MasterCard lose out on data processing fees because they aren't providing clearing and settlement services. A similar situation is also happening with the other two, where Stripe and Adyen heavily promote pay by bank or open banking solutions. And in other cases, even when either Visa or MasterCard is present, Stripe and Adyen minimize fees by using their own value-added services such as fraud security. Moreover, Walmart and Amazon, which are the two biggest retailers in the world, are exploring payments using stablecoins that can bypass Visa and MasterCard entirely. Other blockchain alternatives are also rising to achieve a similar goal. And finally, even though Google and Apple Pay use Visa and MasterCard networks, there is the risk that they can decide to build their own payment processing network. All of these alternatives possess some level of risk to Visa and MasterCard's business model. But the troubles for the two companies do not stop here.
We couldn't get comfortable with the regulatory risk.
Consumer Protection Agency, things
there
like that.
There was outstanding kind of antitrust litigation relating to kind of monopolistic practices of the Visa MasterCard. And when you have a strategy where you put 10, 15+% of your assets in any one investment, you can't take even a very small risk of a catastrophic outcome.
Wow, interesting.
And so we passed on MasterCard.
Right now, Visa and MasterCard are facing what is arguably the most severe coordinated legal and regulatory assault in their history. The walls around their duopoly are being attacked simultaneously by the US Department of Justice, Congress, state legislatures, and massive merchant coalitions. One such example is the Credit Card Competition Act, which was reintroduced in Congress in January 2026 with bipartisan support. Crucially, the legislation gives the merchant, not the bank or the consumer, the power to choose which network to route their transaction through at checkout. Merchants will almost always choose the cheaper network, effectively breaking Visa and MasterCard's guaranteed routing monopoly, even if one of their cards is used. Other bills include penalties, such as a combination of massive potential fines, cap on fees that the two companies can charge, and a ban on certain fees, such as on the sales tax and tips portion of a transaction. At the end, if we combine all of these just presented factors, we can see that the market share of both payment companies is on the decline, and the duopoly that they have enjoyed so far in the payments industry is starting to disappear. Major industry reports from Capgemini and WorldPay confirm that while Visa and MasterCard aren't disappearing, the rising competition will eat away a big part of their market share. Capgemini explicitly projects that account-to-account and instant payments will wipe out 15 to 25% of future card transaction volume growth by 2028 alone. Now the question that you might be wondering is, what are Visa and MasterCard doing about this? And to be honest, it's not like they're sucking their thumbs. Matter of fact, they have been preparing for this situation for a while. They actually have one more business segment that I didn't mention in the beginning, and it is called value-added services. These include services like cybersecurity, AI-driven fraud detection, tokenization, and data analytics, which both companies are now actively shifting their revenue streams towards. One way they're doing that is by aggressively acquiring A2A infrastructure companies. And both companies have definitely seen explosive growth in this market. Currently, value-added services makes up roughly 35 to 40% of MasterCard's revenue and about 30% of Visa's. And it is growing at a blistering pace, often 20 to 25% year over year, which is double the growth rate of their traditional card networks. Saying that, this does not mean that they enjoy the same market dominance that they previously had in the payment industry. Here, they run headfirst into the companies that have historically owned consumer data. When it comes to data, risk and identity titans, the industry includes companies like FICO, Experian, Equifax and many more. And when it comes to security, analytics and tokenization services, the competition includes Fiserv, FIS, Global Payments and ACI Worldwide. They even face some of their well-known competitors like Stripe, Adyen and PayPal's Braintree in some of these services. Now I won't get too deep into this business segment in this video, but I think you got the idea of the competitive landscape. Even though Visa and MasterCard possess some inherent advantages, especially when it comes to the amount of consumer data they have collected from all of the payment transactions, how much more market share they can achieve here is definitely harder to say with as much confidence. While the two companies have definitely adapted in a way, the duopoly that they have enjoyed before is probably something that we are unlikely to see again. And even more questionable is if this new industry is going to be able to fill the high margin profits Visa and MasterCard will potentially lose in the payments market in the future. or even if a new disrupting force like AI, for example, will disturb this new business segment. If you enjoyed this video and you want to learn more about finance and investing, please check out these videos at the top, and I'll see you in the next one.